Today, we're diving into something pretty wild, how just 4 simple words managed to spark a multi-trillion-dollar fire in the global markets. It's a fascinating look at the financial ripple effect in our crazy, hyper-connected world. Let's get right into it.
So, have you taken a peek at your portfolio lately? Yeah, probably not a pretty sight. If you're seeing a lot of red and wondering what on earth is going on, you are definitely not alone. The market's been a bloodbath, and the reason why is probably not what you're thinking. It sounds kind of impossible, right? But this entire massive downturn, the sea of red across the board, it can all be traced back to one single, tense moment, and just 4 words. Okay, so let's set the scene here. What we all witnessed wasn't some slow, gentle decline. No, this was more like falling off a cliff. It was a sudden, sharp plunge that smacked multiple markets all at once, and it kicked off a whole lot of panic. And to give you a sense of just how severe this was, just look at Bitcoin. It was cruising along, looking pretty strong near $98,000, and then, wham, a nearly 10% drop, just like that. And of course, when Bitcoin sneezes, the altcoins catch a major cold, and they got hit just as hard, if not harder.
But here's the really crucial part. This was not just a crypto problem, not by a long shot. We're talking about the heavy hitters in the US stock market. Nvidia, Apple, Google, they all took a nosedive too. It's just more proof of how interconnected everything is now.
All right, so if it wasn't a problem with company earnings or some big financial crisis, what was it? Well, this is where things get interesting. The real trigger wasn't financial at all. It was geopolitical. Let's trace this whole mess back to the exact moment the panic button was hit.
And believe it or not, the whole thing was sparked by political tension over comments from former President Trump about Greenland. Yeah, you heard me right, Greenland. That's what put the entire global market on edge.
The whole thing really boiled down to one specific moment. During a press conference, a reporter basically pushed for details, asking just how far he was willing to take this whole issue. The world was listening, waiting for the answer.
And there it is. The answer was 4 words. You will find out. That kind of aggressive, open-ended uncertainty is the one thing markets absolutely hate. It's not the risk you know that causes panic. It's the risk you don't know.
And the reaction? It was instant, and it was brutal. In what felt like a blink of an eye, trillions of dollars in value were just wiped off the US stock market, a direct consequence of the massive uncertainty packed into that one short phrase.
So you're probably asking, how on earth do 4 words about Greenland make the price of Bitcoin crash? Well, it's all about a chain reaction, a ripple that spread from one market to the next.
Let's break it down real simple. Step 1, the political statement creates a ton of fear and uncertainty. Step 2, that fear immediately spills over and hits the US stock market hard. And step 3, because crypto is still so closely tied to what stocks do, it gets dragged right down along with it. A perfect, painful 3-step ripple effect.
But here's the twist. Not everything went down. As all this fear spread, we saw a classic market reaction kick in, what's called the flight to safety. See, money doesn't just disappear into thin air, it moves. So the question is, where did it all go?
Well, in times like these, when everyone is scared, investors tend to do the same thing. They sell what they see as risky assets, and they rush to put their money into things that have a long history of holding their value during a crisis. We call these safe havens.
And you can see that great divide right here. On one side, you have the assets that got hammered, US stocks, cryptocurrency, and on the other side, investors piled into the old-school precious metals, gold and silver, which actually saw huge gains. This chart just drives the point home perfectly. Look at that. The performance of risky assets craters, going deep into the red. At the exact same time, the safe havens are shooting up into the green. I mean, this is a textbook example of market psychology in action. And we're not talking about a little bump either. Gold didn't just inch up, it soared to a brand new all-time high. And silver surged to nearly $94 an ounce. That shows you just how powerful that wave of fear really was. Okay, so we've covered the what and the why, but now for the big question, what do you actually do in a market like this? So let's switch hats and look at this from a professional trader's short-term perspective.
First up, a big dose of reality. Even the pros get beat up in an environment like this. The author of the analysis we're referencing was very open about taking 2 losses when his trades hit their stop loss. It's a super important reminder that nobody wins every time, and managing your risk is everything.
Now, to understand how a trader might see an opportunity here, we need to know a bit of jargon, the CME gap. Basically, it's a gap in the price on a futures chart.
And traders often look at these gaps as magnets that the price will eventually come back to fill it.
So in this big drop, Bitcoin already filled a gap that was waiting below. But in the process, a new gap has now opened up higher between 92 and 93,000. For a short-term trader, this new gap is like a flashing light. It represents a potential target for a quick price bounce.
But, and I really need to emphasize this part, this is only a potential signal for a quick in-and-out trade, a scalp. This is absolutely not a sign that the overall downward trend is over. The big picture is still looking pretty weak.
So the main takeaway for anyone trading right now is simple. Be extremely careful. The overall trend is not your friend. This isn't a long-term buying opportunity. And if you're not managing your risk down to the dollar, you are playing with fire.
You know, when you zoom out, this whole event is just a powerful, almost scary reminder of how intertwined everything is. Politics, stocks, crypto, all of it. And it really leaves us with a big question to think about. In a world this fragile, where's the next shock to the system?